Okay, we're going to start today's conversation with Ken Elefant, founder and co-founder and partner at Sorenson Ventures. Ken, welcome back to the show. You've been here before. Great to see you.
Great to see you. Thank you for having me.
So let's catch up, maybe level set a bit on, your funds. I know you've been working with your Fund 1 and are in the middle of raising Fund 2. And Fund 1 was about $100 million, right?
That's right. So we have two funds at Sorenson, Sorenson Ventures, which is our early stage fund, and Sorenson Capital, which is our growth fund. So at Sorenson Ventures, we have a $110 million fund, and we're focused on seed and Series A investments. We're typically investing anywhere between $1 million to $5 million initially in startups, and then we do follow-ons in those companies. And Sorenson Capital is our growth fund, investing in companies that typically have over $5 million in ARR. And the typical initial check size for Sorenson Capital is anywhere between $10 million to $40 million.
Okay. And let's focus on your categories of investments. Where are you today? What's the thinking? What have you been investing in? What are you thinking going forward?
Yeah, so at Sorenson Ventures and Sorenson Capital, we're totally focused on security and enterprise software investments. And you can see most of our investments in enterprise software have a lot of intellectual property associated with it. And the rationale for this is that the movement to cloud is real. And as such, the complete software stack is changing. Everything from the database level up through systems management, up through analytics, a la Snowflake. So the entire software stack is changing. And the same thing is true for the security stack, because the perimeter doesn't exist anymore. Every enterprise, whether it's a small enterprise or a large enterprise, is connecting to their partners and their customers through the cloud. And so that creates huge opportunities for startups, and that's where we're focused.
Great. Let's actually start by talking about some of the companies that you have invested in and are particularly excited about. Just to give us a flavor of what is it that you have been up to, and as you're doing that, tell us when you encountered these companies first, and what did they have? What was it about them at that time that caught your imagination and, was credible enough for you to write these checks?
Sure. I'll give you a couple of examples. So we're investors in Fastly, which, as you know, provides really fast internet access from the edge. And the rationale for this is exactly what I talked about before in terms of the trends, that enterprises are leveraging the cloud more, they're leveraging more content, and the existing systems that are out there through Akamai and others, we didn't think were built for the new age. And so we were attracted to Fastly initially because of the technology. And then we saw how interesting it was from the customer's point of view and how it was being implemented. So, Fastly ultimately went public and is still, on a great roll. On the early stage side, I'll mention a company called Scicognito, where we led the seed round. Scicognito is a security company. And one of my theses in security is that it's very difficult to sell to chief security officers today versus when I got into the business 21 years ago. And so you need a new route to sell into enterprises. One route is through open source. Another route might be through freemium. Another route might be through DevOps. Or the way that Scicognito does it is through agentless security. And what that means is that an enterprise doesn't need to download any software on their laptops or servers internally. And I thought that was really interesting. So this was a thesis that I've had for probably about 2 years before I invested in Scicognito. And the reason that I was attracted to Scicognito is that it was the first company that I thought had the fidelity of data that could be really interesting for enterprises.
Hmm.
And real quick, what they do is they pound the outside of an enterprise just like an attacker would, and they see the 1,000 vulnerabilities that are there at an enterprise. But what's really unique about Cognito is they have an attack validation technology where they can see how important each vulnerability is. So if you were Equifax, you would have seen that there's an Apache Struts web server issue on the outside, and that's the first thing that you need to solve because it's connected to a database that has usernames and passwords.
Interesting. So you are basically, the company is able to kind of assess each enterprise on their different levels of vulnerability across different threats, and then present that as the opening part of the sales cycle. Yeah.
So they've invented this space called attack surface management, and they could go into an enterprise and quickly bring up an analysis that shows here's your 1,000 vulnerabilities and here's your top 3 that you should focus on.
Interesting.
And so, what happened there is that, what we try and do at Sorenson Ventures is open up doors at customers and partners. So the company did a great job, closed several new customers. We ultimately brought in Lightspeed for the Series A and then Excel for the Series B. And now we're in serious expansion mode. Great.
Wonderful. So you may have read this article that I wrote recently on SaaS. We are seeing a lot of activity. I've had a lot of conversations with people who have built SaaS companies or are building SaaS companies, and this is true especially in the data domain. It's true in the analytics domain. It is true in the AI domain, where people have built, stacks of technology and have gone after a particular problem and are a particular industry sector or functional solution, etc. But many of them are, looking at a past strategy to do a broader play, kind of like the Salesforce.com playbook with CRM as the app and then opening up the platform to developers to develop different products for different domains. I would like to hear what you are seeing in your portfolio and in your deal flow on this trend.
Yeah, so we have a thesis as well in this space, and what we find is that enterprises like to buy products that solve a particular problem. So I'll give you an example. We're investors in a company called Support Logic, and what Support Logic does is they leverage machine learning and AI to make sense of all of the information that's coming into the customer support group. Sounds easy, but it's extremely hard to do. So because what's really important to enterprises is understanding what are the big problem customers, and this is targeted at B2B companies. What are the customers that are having problems? Because if you can see those escalations before they erupt, you can solve churn problems immensely. But to your point, what we saw is that all this information that's coming in has other valuable information associated with it. So you get information on what are the features in the product that aren't working well. So that can go to your engineering group to fix. But it also brings in ideas in terms of what the product should be doing from the support perspective. It also helps the sales group understand where to upsell customers. So there's a lot of potential areas for growth if you start off with the right initial wedge.
And what, so if this product, the product that you are talking about, what is it built on? What is the data stack? Where is the innovation? How does it play with the ecosystem? Is it built on another data platform, or what's the story?
Yeah, most companies have a CRM system, whether it's Salesforce.com or Zendesk or some other platform where the support engineers are logging in the information.
Yeah.
So support logic integrates in with each one of those systems and takes signals from other systems as well. And what the magic is making sense of that data. And so if you have a customer that has a problem in terms of how their product is interacting with their Oracle database, that issue should be shuttled to the support engineer who's best equipped to handle that problem immediately. You shouldn't need to get passed to 4 places and have that take a week to solve, as an example.
And when you are investing in companies like this that are, supplemental to other ecosystems like the Zendesk ecosystem, like the Salesforce ecosystem, like maybe Freshworks and so on, with all the different ecosystems that they're connecting with, are they getting substantial support from those ecosystems and their, let's say in this case of Salesforce, they have a marketplace, there's App Exchange. Zendesk has been trying to kind of support the ecosystem as well and so forth. What's the experience of company building for a company like that has other players that already have significant presence in the market?
Yeah, great question. So when these CRM companies are going into potential customers and competing with other CRM companies, they're looking for differentiation, and they're looking for ways to show that their product roadmap is really unique. And that's what support logic can do with them. And that is exactly what we're seeing from a lot of those vendors that you've talked about. The other thing is that there's channel partners that are out there. Think of like the Accentures or the Wipros of the world, who are calling on large customers. And they, one of their key issues is to decrease costs in customer support, but also increase efficacy and increase upsell and so on. And this is a perfect addition for that. And each one of these resellers already have products like Salesforce or Freshdesk or so on.
What else do you have in your portfolio in the AI domain that is scaling well?
Yeah, so one of the theses that we have is that with this movement to cloud, the data is getting much, much, much more complex. And what I mean by that is that in the old days, you had a stovepipe system and you had a stovepipe data warehouse, and your information was going in and out from there. In forward-looking companies, they have data going in and out of Snowflake. They may have a big data lake in Hadoop. They have data going across databases. They're using Kafka. Managing all of this data and their data pipeline is extremely difficult to do. So we've invested in a company called Excel Data. So think of it as Datadog or App Dynamics, and instead of just being at the app layer, it's all the way down to the data pipeline layer. And what we're finding is large customers like Walmart, their subsidiary called PhonePe, need this because in an e-commerce situation, you need fast access to data. And you want to make sure that you can control all of the costs associated with the cloud. They have some really large customers like GE and several other customers, Michelin and so on.
So this is a data layer play?
Think of it as an observability play on your data pipeline.
Okay. Interesting. The data stack has so many players. There's the Snowflake world. There's the Informatica Talent world. There's the Alteryx world. There's the Tableau ThoughtSpot world. So I'm trying to place your company in that stack.
Yeah, think of it as Datadog or App Dynamics, but all the way down to the data pipeline layer, because those products won't be able to help an enterprise understand where is their data flowing slowly, where, to your point, is the data not being replicated correctly across systems? Where are you paying too much to AWS or Azure?
Okay.
Why is this report or analytics breaking down? Those are the problems that Excel data does. The way this is solved today is that you hire really, really smart data engineers to solve this problem. And so the largest companies have that capability, but even companies like Walmart and GE don't have that capability.
Yeah. On your point about these needing really smart engineers to do things, one of my observations, it has always been my observation, that there are only a finite number of those. So we need abstractions and we need ways to enable and equip people who are not these really smart engineers. They're smart enough, but they're not these rocket scientist types of engineers who can do stuff based on technology, based on abstraction layers and so forth. So this is one of the reasons why I find PaaS to be a very interesting trend, in that it enables a large body of developers to develop apps and do stuff on top of stacks that they don't need to necessarily build. You just don't need to be that, savvy to be able to build a product and build a solution to a problem.
Yeah, and I also think that the smartest enterprises know that they should focus on what they're good at and their core business. They should not try and do site reliability better than Google or Facebook does.
Right. Yeah. Okay. So what now? Going forward, what are you looking for? What is your thesis? What is your post-COVID investment thesis, or during COVID investment thesis?
Yeah, it's a great question. So I first got into the business in 1999, saw a really big upturn, and then saw the downturn in 2000, and then saw the downturn in 2008. I've been very surprised at how long-lasting this upturn has been. Our philosophy is that we're going to continue to invest in entrepreneurs that are coming up with new and unique ideas in security and enterprise software, and back those entrepreneurs that are solving unsolved problems. I'll give you an example. And we've been super active recently. So, to your question about COVID, my philosophy is keep finding those top tier entrepreneurs and back them and help them, and don't worry about the cycles that are out there. If you're backing high quality entrepreneurs building long-term sustainable companies, you'll do great over time. So, one of the big problems that's been out there for 15 plus years is ransomware, and enterprises, unfortunately, are getting breached, and they're going to continue to get breached. So we recently invested in the seed round of a company called airgap.io, and I have not seen anything this unique about ransomware. It's folks that are out of Juniper, so they understand the network extremely well. And their name of the company is really apt, because what they do is they create an air gap around individual devices. And so the issue that I've heard over and over again from chief security officers is that they know they're going to get breached, or they have been breached. And the issue is what happens at that point. And so what AirGap does is since it's created these devices in their own segmentation, when an enterprise gets breached, you just flip the AirGap anti-ransomware kill switch, and that ransomware cannot move from device to device. So for example, in a particular LAN, maybe that will stop my computer from printing to my local printer. That's okay. These devices shouldn't necessarily be talking to other devices directly. So why should my personal computer that's inside the network talk to an IP-enabled video camera, and that video camera is connected to another LAN. That's how ransomware gets spread. So it really looks at the network in a smart way and provides a kill switch. And I thought that was super, super unique.
That's very interesting. That is indeed very, very interesting. What is the background of the entrepreneurs?
Came out of Juniper. So phenomenal domain experience associated with the network. And it's a really good point. So for seed stage deals, we're all about backing first-time entrepreneurs. About half of our investments are in first-time entrepreneurs. What we look for is just this extreme domain experience to solve a problem that nobody else in the world could solve as well as they can.
Which is a good segue to a question that I want to ask you. When you back these seed stage companies, what are you looking for? Because it's not inexpensive to build a product like this. So are you writing checks on a concept just based on the background and the domain expertise of the entrepreneur?
Yeah, most of our investments in Sorenson Ventures are completely pre-revenue.
Okay.
So it could just be, an entrepreneur and, 2 or 3 folks that are with them with the concept. But we have carte blanche to invest up to $5 million in ARR. So sometimes our investments have a little bit more, and we're typically lead or co-lead on all of our investments. So what we look for is a person that has amazing domain experience from his or her past, and if they do partner with somebody that is a serial entrepreneur, then that's even better. Or if they are a serial entrepreneur themselves, that's even better. Because the biggest problem for seed stage companies is getting across that Series A gap. And sometimes a serial entrepreneur knows how to navigate that a little bit better than a first-time entrepreneur. But like I said, what we do once we invest is we augment the team and help them navigate that gap. So team is number one. That's what we look for. Number 2 is the market. Is this a small but rapidly growing market? Because by definition, if you're going after a large market, there's already large competitors that are out there. So using, air gap as an example, ransomware, anti-ransomware is a huge market, but no one's invented this anti-ransomware kill switch as an example. So that's second. Are they going after a small but rapidly growing market? And then third, to your point, is what is the company's differentiation? Sometimes it could be technical differentiation. Sometimes it could be channel differentiation. So, for example, we're investors in Bamboo HR, which is an HR software as a service play. And they mastered early on the channel strategy. So that was their differentiation.
Okay. And what's the channel strategy of Bamboo HR? I don't think we covered them.
Oh, so what Bamboo HR is, it sets up your entire HR system, benefits and payroll and so on. And so what they do is they go out to all of these resellers that are trying to get companies up and running and get their HR system set up.
Okay. All right. Very good.
I'll give you another example on channel. So we're an investor in a company called BotKeeper, which is using machine learning and AI for automated bookkeeping. So they would go into a company and make either a bookkeeper extremely efficient, or they could take that workflow off of their hands altogether. And originally, we thought that there was a risk here with the channel, because you have all these accounting firms that are out there doing bookkeeping services and tax services. Turns out the channel loves BotKeeper because their lowest margin business is the bookkeeping side, where they make a lot of money is providing strategic advice on taxes. So the channel is really, really pushing BotKeeper as an example.
I see. Okay. Cool. What about geography? Are you investing all over North America, just in Silicon Valley? What's the boundary?
Yeah, great question. So since we focus on security and enterprise software. The vast majority of our investments are in the United States. About 60% are in Silicon Valley. The headquarters of Sorenson Ventures is in Silicon Valley, and we have part of our staff in Utah. So we have about 20% of our investments are in the mountain region, Utah and the mountain region. For example, we were investors in Cradle Point in Idaho. So at that point in time, it was kind of a diamond in the rough. And because we're doing a lot in security, we see lots of startups out of Israel. And because we do a lot in machine learning and AI, we see lots of startups out of Canada.
Okay, very cool. Very good. We're going to actually, I have something that I'm going to send you very soon. Very deep domain knowledge, and they're already doing over $1 million in revenue. So we're working on, tidying it up to send it out soon.
Fantastic. Yeah, and happy to chat with any of your entrepreneurs. They can just connect to me on LinkedIn.
All right. Take care. We will see you soon again. Bye, Ken.
All the best. Bye.